Hello and welcome to today's update. Today is 2nd of November. You're looking at the daily chart of S&P 500 and you can see there's an ugly looking chart right now. There's a big red candle. Federal Reserve increased interest rate by 75 basis point. This was widely expected, so there was no surprise. But what was surprising was what Fed Chairman Powell said after the Fed rate announcement. Now, market was expecting some kind of a pause or some kind of an indication from Federal Reserve that they were going to slow down the rate of interest rate increases. But Federal Reserve Chairman Powell made it very clear that any talk of pause is premature. So that's one of the things he said. He said it more than once, and market certainly didn't like it. Number two thing that he said, which I think was negative for the market, was he also didn't mention where the terminal rate would be. In the September FOMC meeting, Federal Reserve said that the terminal rate would be around 4.75%. But today he said that the terminal rate would be, without specifying, above where they thought it would be in the September meeting, which means the Federal Reserve is definitely thinking that it would be above 4.75. Now, he didn't say specifically where. I think it's deliberate. It's deliberate because he probably has a number in mind which market hasn't factored in. And if he had mentioned this, market would have reacted much more negatively. And that probably is to the north of 5%. You see, market was willing to accept 5% because that 5% is already factored into the market. So let's have a quick look at the rates first. So this is the Fed Funds futures in April. It closed at 4.99. So this 5% rate is already factored in the market. But Federal Reserve Chairman today didn't specify where the terminal rate would be, only that it would be above where they thought it would be, which means I think the Federal Reserve thinks that the terminal rate would have to be north of 5%. And that's why I think he didn't say it specifically. He just left it out there. And if he had said it, I think the market reaction would be negative. I have a feeling that market rates in the market is going to go above 5%. Now, we've got a report coming out on Friday. The Labor Department is going to release the unemployment report. If the unemployment report shows that the economy, the labor market is still very strong, I think yields on Fed Funds futures are going to go above 5%. Because that would continue to show that the labor market is strong and the Federal Reserve would have to do more, meaning above 5% to basically break the strength of the labor market. And I think that's why Fed Chairman Powell didn't say what the terminal rate would be. But I think if I'm reading him correctly, he thinks that it would be above 5%, and that's why he didn't say it. Either way, the Fed Funds futures closed at 5%, the April Fed Funds futures. I think in coming days, especially if the unemployment report is strong on Friday, this will go above 5%. If we look at the two-year rose 5 basis points to close at 4.6. Now the previous high was right here at 462. So I have a feeling that 462 will be breached and it's going to move higher. And especially if on Friday the job market, the labor market remains strong, this would go above 460. The 10-year rose 4 basis points to close at 4.09. Now the 10-year could go up more, no doubt, but I think the 10-year will start to reflect the fact that there is now a higher probability of a deeper recession. In fact, Fed Chairman Powell also said something else, which is that the window of opportunity for a soft landing is shrinking, which means that he's now beginning to communicate to the market that the recession is going to be, it's not going to be a soft landing, it's going to be more than a soft landing. So if that's the case, then the 10-year would actually reflect the fact that there would be a rate cut coming in, in 12 months, 18 months. If we have a recession, then the Federal Reserve would have to basically cut interest rate in about 12 months, 18 months. So the 10-year would reflect some of it. So 10-year would be lagging behind the 2-year, but very much inverted. In fact, the inversion between the 10-year and 2-year is almost 50 basis point right now. But either way, it wouldn't be coming down at the moment. It would remain elevated. So the rates are now looking like they have more room to the upside, and that does not bode well for the stock market. So if we come back to S&P 500, S&P 500 lost 2.5% today to close at 37.59. And more importantly, this uptrend that that it had developed, this uptrend has been breached. And this is a bearish looking candle. This candle doesn't have any wick. This suggests that we may have more weakness ahead. You can see the MACD, which was moving higher and looks like it was planning to go above the zero line. It's now beginning to turn over. If it turns over and heads back below the zero line, that would be negative. You see RSI has started to move lower. In fact, it has now gone below this previous low. So this is now looking weak. And stochastic, which was in overbought territory, is now moving lower. So overall, the technical picture doesn't look good. Now, the first area of support would be right here. This is around this is around 36.50. So this level is 36.50. So this would be the first level of support. If this level is breached, then the previous low around 3,500 gets exposed. So we'll see what happens to 36.50, whether this level can hold or not. But at the moment, given all the what Fed Chairman Powell said, this level looks risky to me, especially if we look at what's happening in NASDAQ. So if we look at NASDAQ, so this is NASDAQ 100, you can see the NASDAQ was weaker than S&P 500 anyway, but today it's looking even worse. So you can see that it has now made a lower high and then a lower low. So this level, which was the previous swing low, 11,165, that level was breached. And NASDAQ doesn't have any support, until the previous low, which is around 10,435. So this is looking weak. This is looking weak because all of the big tech companies, they're looking quite weak. Amazon, Google, Microsoft. So there's no leadership. So that suggests to me that there would be more weakness ahead, and NASDAQ could very well retest this low. Whether it breaches this level or not, to be seen. But it has now exposed this low, so we could see a test of that low in not too distant future. And especially if the labor market, if the jobs report on Friday is strong, then I won't be surprised if this level is breached. That's NASDAQ. If we look at the corresponding figures for SPY, so SPY has fallen below broken support at 379. So the next area of support would be right around here, which is around 365, and then the previous low around 350. So those would be the levels to watch out for SPY. And QQQ, so this level is breached, which is 267. The next level is this previous low around 255. So again, this is not looking positive at all. You can see MACD it wasn't able to break above the zero line, which is negative. and RSI has made a lower high and lower low. That's negative also. It's now below the 50 level, so that's not positive. So overall, weak pattern, weak technicals. So it looks like there is more to the downside. If we look at some of the individual sectors, just to see what they're doing. So this is XLK. You can see that XLK had gone up 13.5% since this low right here. So obviously that means that it was time for a pullback, and that's exactly what we are seeing right now. Momentum indicators are also looking weak right here. If we look at XLP had a big run up. It had gone up 17%, you can see, since this low. So even though it was down 1.26%, there's a little bit more to the downside. I think this is the next area of support, 3250 area. If we look at XLB, which was another area which had done well in the last few weeks, it was up 12.5%. So it was down 2.6%. So I think there could be a little bit more. I can see the momentum indicators are weak. XLI, so this was one of the strong group. It was up 15.6% since this low. It was down 1.76%. So I think there is more to the downside. Initial support would be to this level, 88.70. If we look at energy had a huge run up since reaching a low right here. It was up over 32%. So energy could also come down, especially in light of the fact that if we have a deeper recession, then demand for oil could weaken. So that could put some pressure on the energy sector. So XLE, it's overbought. If you look at the momentum indicators, they're all in overbought territory. So it's entirely possible for it to pull back. So the support would be around here, so around 83.50. If we look at XLV, it also had a good run up. It was up almost 12%, so down 1.7% today. So initial support would be to around 127 right here. So looks like all of the S&P 500 sectors which had a big run up, they're due for a pullback. So that also is going to put pressure on S&P 500. If we just quickly look at a couple of the individual names. So we look at Tesla. So let's see what we see. So Tesla, so this was an area which it held. It was 218. So this was a support area for Tesla, but Tesla closed below this level. So this now exposes the previous low to 200. So Tesla is looking weak right here. If we look at Apple, we see similar picture. So after this big rebound last Friday, it wasn't able to capitalize, so it's been pulling back. MACD, it wasn't able to go above the zero line. Looks like it's turning over to the downside. RSI is also now pulling back. It's now closed below the 50 level. So this is the support area 144. It could very well breach that level. If that's the case, then that opens up this previous low around 135. So this is also not looking all that great. And all the other big tech names, they're looking quite weak. Amazon is just on a free fall, so not much to say. Microsoft, it's right at the previous low right here around 219. This level could very well, it could very well break below this level, so that would not be positive either. So looks like there's more downside to come, especially if the rates continue to move higher, and given the fact that the technical picture now looks weak, so odds of additional weakness lies ahead. Well, we'll leave it here today. Thank you very much for watching the video.